If you want to understand where serious generational wealth is created in property markets, you have to begin with one simple truth: land is finite. Apartments can be replicated, towers can be built higher, density can increase, entire skylines can be reshaped, but prime land inside well-planned, infrastructure-led villa communities cannot be manufactured endlessly. Once it's absorbed, it's gone. And when that land is controlled by government-backed master developers in a capital city that attracts global wealth, long-term outcome becomes increasingly predictable. Abu Dhabi is entering that exact phase. Over the past few years, we have seen very clear evidence that villa demand in the capital is not speculative and it is not shallow. It is deep, structured and supported by serious capital. One of the strongest examples of this has been what we've witnessed through the developments delivered by Modon properties. Modon has demonstrated something extremely important about Abu Dhabi's premium villa appetite. The Hills communities were not entry-level housing, they were high-quality, master-planned villa environments launched at a meaningful price point. Both phases were absorbed successfully, and absorption at that level confirms that demand is real. What makes that even more significant is the price bracket. Those villas began around 10 million dirhams and moved well beyond that depending on plot size and positioning. That level does not attract inexperienced or speculative buyers. It attracts financially established families, entrepreneurs, executives and globally mobile professionals relocating their entire lives to Abu Dhabi. When someone relocates their family, they are not making a short-term trade. They are making a 5 to 10 year commitment. That behavior creates stability. Stability in villa markets creates price floors, and price floors are the foundation of long-term capital appreciation. To understand what happens when this type of demand meets land scarcity, we only need to look at Dubai. Let's go back to 2020. In 2020, the Dubai villa market was in a very difficult place. The world was emerging from COVID uncertainty. Sentiment was cautious, liquidity was selective. In that environment, Emirates Hills, one of Dubai's most prestigious gated villa communities, had many high-quality properties trading between 30 and 45 million dirhams. At that time, that was considered strong pricing for ultra-prime villa stock. Fast forward to 2025. Today, comparable villas in Emirates Hills are commonly marketed between 70 and 100 million dirhams, with some bespoke estates exceeding that range significantly. That represents approximately 80 to 120% increase in just 5 years. That is not incremental growth, that is structural repricing driven by land scarcity in an international capital inflow. Now consider Palm Jumeirah. In 2020, many waterfront villas on Palm Jumeirah were trading between 18 million and 30 million dirhams. Those numbers were considered premium waterfront values at the time. In 2025, similar waterfront villas are commonly priced between 55 and 80 million dirhams, with some properties trading even higher depending on the renovations and positioning. That equates to roughly 150 to 250% increase in just 5 years. Look at Jumeirah Golf Estates. In 2020, prime villas were often available between 8 and 15 million. In 2025, comparable homes are frequently sitting between 20 and 40 million dirhams, depending on plot size and upgrades. That represents 100 to 200% over 5 years. Now pause and reflect on what caused that level of growth. It was not social media hype, it was not speculative flipping alone, it was land scarcity, infrastructure maturity, and sustained global capital inflow. Communities like Emirates Hills, Palm Jumeirah and Jumeirah Golf Estates become irreplaceable once land was absorbed and infrastructure was complete. Once Dubai effectively ran out of prime villa land in those infrastructure-led communities, prices did not stabilise, they accelerated. This is the mathematics of land scarcity. Finite supply combined with rising demand equals upward pressure on price. Abu Dhabi today is earlier in that cycle. The capital offers larger plots, clearer waterfront positioning, lower density and government-backed master planning. It offers lifestyle positioning that is structured, stable and internationally attractive. However, it does not offer unlimited land. The amount of true prime infrastructure supported villa land in Abu Dhabi is finite. Once these zones are developed and absorbed, replacement becomes rare. That is where the repricing phase begins. Another defining variable in this cycle is global wealth movement. We are living in a period of strategic relocation. Families are reassessing where they want to base themselves long term. They are prioritizing safety, governance, education infrastructure, tax efficiency, and quality of life. Abu Dhabi checks those boxes in a way few global cities can. The wealth moving into Abu Dhabi is not fragile capital testing a market. It is structured, globally advised money. These are established middle to upper class families, executives and entrepreneurs relocating entire households. When families relocate with long-term intent, they seek space, privacy, community and stability. That drives villa demand. When villa demand rises inside controlled land release environment, repricing becomes structural rather than speculative. Government-backed developers in Abu Dhabi operate differently from volume-driven markets. They release in phases, they protect pricing, they prioritize long-term urban planning over short-term volume. Roads are completed, landscaping is delivered, roads and amenities are integrated properly. That builds confidence. Confidence attracts more buyers, and more buyers absorb more land. As this land supply tightens, pricing strength increases. This is not theory, this is basic economics. Now consider the current entry points in Abu Dhabi premium villa communities. We are seeing structured communities launching with entry points around 10 million dirhams, offering larger plots, clearer waterfront exposure, and carefully designed master planning. These are not random clusters, these are curated environments with long-term positioning in mind. When you compare that to Dubai's 2020 numbers, you begin to see the opportunity window. In 2020, many buyers hesitated at the 30 million dirhams mark in Emirates Hills. In 2025, those same brackets look inexpensive relative to current values. In 2020, buyers debated 20 million dirham waterfront villas in Jumeirah. In 2025, those numbers have more than doubled in many cases. The majority of villa appreciation historically occurs once community is fully established and land is no longer readily available. Early entrants benefit from infrastructure completion and scarcity creation. Later entrants pay premiums for maturity. Abu Dhabi today sits in that early to mid transition phase. The prime land is still being developed, the map is still being drawn, but land is not infinite. Once prime waterfront plots and infrastructure-led villa zones have absorbed, replacement supply becomes narrow. When that narrowing becomes visible, pricing behaviour will change. The question is not whether properly planned infrastructure-led villa communities in a capital city with growing global relevance will appreciate over the next 20 years. History across global cities suggests that it will. The real question is timing. Because once scarcity becomes headline news, pricing behaviour accelerates. Those who positioned before scarcity became obvious in Dubai saw 80, 120, 200% increases over 5 years in prime villa communities. Abu Dhabi has the structural ingredients that preceded the growth cycle: controlled supply, global wealth inflow, government-backed planning and rising end-user demand. Abu Dhabi's villa story is not loud, it's not speculative, it's structured. And structured markets build wealth quietly but powerfully over time. When you combine finite land, global relocation, infrastructure delivery, and the disciplined release strategy, you create a foundation for long-term repricing. Land does not reset. Once it's absorbed, it's absorbed. And in capital cities where quality of life and governance attracts serious families, properly built villa communities do not depreciate over extended cycles. They become legacy addresses. Legacy addresses always command premiums. The real opportunity lies in understanding where we sit in the cycle today, not where we will once scarcity becomes obvious. Abu Dhabi is building its premier villa map right now, and those who understand the mathematics of land scarcity tend to benefit the most.